there is essentially a run on FTX, very similar to what you hear about in the past about a bank run, where all of the customers at FTX, not all, but a good number of FTX customers went to FTX and said, I want my money back. And so as a result, FTX had to go collect all of its loans from the people
Alameda.
Correct, Alameda Research and other parties.
But they didn't have the funds to cover.
Because FTT's value was doing what? It was decreasing from about $22 a share at the beginning of last week. It's now trading at about 10, 15 minutes ago, $1.35 per token.
Welcome to Critical Thinking Required, hosted by LBW. This podcast is intended for free thinkers, entrepreneurs, and knowledge seekers. Join us as we discuss relevant financial topics, explore with guests their financial journeys, and engage with experts in industries such as space, media and entertainment, real estate, and many more. Buckle up and enjoy the ride.
Welcome to Critical Thinking Required. You're with your host, myself, Tim Bickmore, and my colleague, Nathaniel Leach. And today we're going to talk about a little bit of a debacle that's come up as of late. Most people probably have heard, but we're going to speak about FTX. It is a crypto exchange that really has come under some serious heat. So we have Nathaniel here to talk a little bit about some of the facts. It's still ongoing. It's still unraveling. We aren't quite sure exactly what's going to happen or what was right, what was wrong, but we can at least give some facts and talk a little bit about it. So Nathaniel, by all means, what is happening at FTX?
Thank you, Tim. So to give you some background, FTX was started by crypto entrepreneur Sam Bankman-Fried. I think that's how you pronounce his last name. He goes by SBF, for those of you who are crypto savvy. And before he started FTX, which is a cryptocurrency exchange, as Tim mentioned, he actually started it was basically a hedge fund, an arbitrage trading firm called Alameda Research. And Alameda is the majority owner of FTX. And there's like a holding structure between the two, inter-holding structure. So last week, CoinDesk issued a report stating that $5.8 billion on Alameda Research's balance sheet comprised of FTX's cryptocurrency token called FTT. So this caused quite a stir in the crypto world, to the point where Binance, which is a competitor to FTX and larger, stated that the FTT that they owned, and they were actually not only a competitor, but also an investor in FTX. And as a result of a recent valuation, they received FTT tokens as part of the valuation raise for some of their shares, about $400 million worth. And their founder, who is known as CZ, stated on Twitter that he was going to sell the FTT because based on how much FTT was out there, it looked like Alameda was the largest holder of the FTT. So it was quite an illiquid cryptocurrency. So where the kerfuffle came in was that because Alameda was the largest holder of FTT, and there was a perceived illiquidity issue, there is a theory currently running around that the reason why Alameda had so much FTT was because it was loaned that by FTX, and FTX was able to loan those and essentially were to loan them customer funds, FTX's customer funds, to Alameda Research.
Can we take a pause really quick?
Yeah.
Okay, so just to summarize really quick, because there's a lot going on. We got SBF, who owns a hedge fund company.
Yeah.
SBF also owns the FTX exchange. So
Alameda owns part of the
exchange.
But they're controlled by SBF. Yes,
by the same person.
Mm-hmm.
And so what had happened is that they had taken money from FTX and loaned it to the hedge fund,
Alameda. Yep.
Alameda, be able to invest or
So it's perceived that that was a bailout during the summer of this year when crypto was already going through this huge down cycle, and there was a bunch of blowups at Three Arrows Capital, Voyager, Celsius, Terra Luna. All of these things were going downhill in the summer of this year. It's surmised that FTX loaned them the customer money to Alameda to bail them out, essentially from their own bad bets with these crypto trades.
Got it. Okay. So they made some bad trades in the hedge funds, but then they went to the exchange to be able to get bailed out, which were then perceived as of now customer funds that were used to bail them out.
Correct. And it's not so much. So I want to make this clear. As of right now, there is no, it's hard to know if this is illegal. It's kind of like a gray area for many reasons, in the sense that FTX is registered. It's based out of the Bahamas, so it's not within the U.S. jurisdiction. So there's kind of that gray area there. And it wasn't necessarily like they took people's money at FTX and they just blatantly gave it to Alameda. It was more about, it's kind of like when you go to a broker and you say to the broker, hey, you can loan out my shares. I own shares of Apple, and I want you to loan out my shares of Apple to people who want to borrow against Apple. And in return, I get, basically, it's like a loan. So I get interest on that loan from those people who are borrowing against Apple. It's the similar concept with what happened between FTX and their customers. FTX was allowing for their customers to make these kinds of bets where I want to borrow against that. I want to buy along this, but I'm going to borrow against you with this collateral, and I'm going to buy more of this token or that token. What FTX did was it took those the customer funds, which were essentially bets on X, Y, and Z, and gave those funds to Alameda to shore them up. And so it's very convoluted in that sense. And it was basically, it's not so much an illiquidity issue that's happening right now. The FTT was illiquid as a whole, but it's more of an insolvency issue where, as a result of CZ, of Binance, there is essentially a run on FTX, very similar to what you hear about in the past about a bank run, where all of the customers at FTX, not all, but a good number of FTX customers went to FTX and said, I want my money back. So they wanted to wrap up all these trades that they had and clear out their cryptocurrency or their cash out of FTX and take it out. And so as a result, FTX had to go collect all of its loans from the people
Alameda.
Correct, Alameda Research and other parties.
But they didn't have the funds to cover.
Because FTT's value was doing what? It was decreasing from about $22 a share at the beginning of last week. It's now trading at about 10, 15 minutes ago, $1.35 per token. So that $5.8 billion in FTT tokens that Alameda had on its balance sheet, which was as of June 30th, 2022, by the way, is now significantly less. So there was an insolvency issue. There was a party issue where one party could not pay the other because all these other customers were coming to take their money out of FTX. So as a result, what we've recently learned at the end of last week was that SBF had resigned from FTX, and also FTX has officially gone into bankruptcy. Some of you may have heard that earlier last week, Binance actually made a non-binding play for FTX, but within 24 hours, they pulled out because they instantly saw that there is an approximately, it ranges, a $5 to $10 billion hole in FTX as a result of this disparity between assets and liabilities.
Okay.
So what was once, just to round it out, So at the beginning of last week, or at the last valuation of FTX, it was valued at $32 billion, and SBF's net worth was estimated at about $26 billion, I believe. FTX is now believed to be worth zero, if not negative territory.
So to summarize this interesting debacle that is going on, you had SBF owning a hedge fund, who also then owned FTX, the exchange. The hedge fund made some bets. Those bets didn't turn out well. They then went and got loan from FTX in order to become solvent in their bad bets. Now that because they had a loan on the books, what happened was there was a run on FTX, which means they needed to go get their money to be able to cover what people are getting
from Alameda and other people that they lended to.
But because Alameda, the hedge fund, didn't do well, they didn't have any money to give to FTX,
or it was very illiquid in FTT tokens.
Got it. Which then FTT tokens value was coming down. So essentially the consumer then wasn't going to be able to get paid.
A lot of them have up to this date not been able to withdraw all or much of their funds.
Got it. Wow. That's a lot. That is very interesting. And I mean, a good question too is if people listen to our podcast and listen to us, do we think cryptocurrency is going to go away? There's a lot of things that have been happening in the last year with cryptocurrency, with the fall of the value, where we're seeing a lot of leverage that was in the space that is now kind of creating this collapse to a certain degree. Do we think cryptocurrency is going to go away? No. Do we think blockchain is going to go away? No. But what we really wanted to talk about was that if you're going to play around in this space, you have to make sure you understand the mechanics behind the scenes. And if you don't, you can very much get burned, like you could see at FTX. This also happened obviously with Voyager and other exchanges as well. Different circumstances, but kind of similar. You just have to pay attention. This is the wild, wild west. There is little regulation. As Nathaniel mentioned, FTX was in the Bahamas, right? Which then creates also some legality issues of being able to get your money back. So you just have to pay attention. If you're going to make a bet and you're looking at asymmetric returns, make a bet you can lose and never need that money ever again. And if you want to do that, sure, that's something that maybe you could think about. But you have to pay attention. You have to do the work in order to understand what the risks are really at, not just because someone said, hey, this is pretty cool, you should do it. You just have to really, really pay attention to it. But it will probably evolve. The industry will probably change. There'll probably be new regulations because of this, because the amount that this may be a fraudulent move, this may create some other issues. We'll have to see how it plays out, but we just want to emphasize that you really need to pay attention in this space, and do the background work.
Do your due diligence. It's your money.
So thanks for updating us on FTX, and Nathaniel's been reading a bunch on it and watching it as it goes, because what's really interesting too is people say it's different, but this happens in a lot of asset spaces. It's not just cryptocurrency. So thank you so much for joining us. We hope you enjoyed this episode, and we look forward to talking to you later.
Like and subscribe.
Thank you for taking the time to start your journey of thinking differently and listening to LBW talk about stuff they love. Until next time.